Hi everyone, welcome back to my channel. Today, we're going to tackle some common financial myths that might be holding you back from achieving your financial goals. From investing in real estate to paying off your mortgage quickly, we'll dive into the reality behind these myths and explore alternative perspectives. Let's get started. Myth 1: you should always invest in real estate. This myth says that investing in real estate is always a good idea. But is it really? While real estate can be a great investment, it's not always the best option for everyone. For example, if you're not planning to hold on to the property for a long time, the closing costs and other fees might eat into your profits. Plus, there are other investment options like stocks or bonds that might be more suitable for your risk tolerance and financial goals. Myth 2: you should always pay off your mortgage as quickly as possible. This myth says that paying off your mortgage quickly is always the best option. But what if you have other high-interest debt or investment opportunities that could earn you more money in the long run? It's important to consider your individual financial situation and prioritize your debt repayment and investment strategies accordingly. Myth 3: you should always avoid credit cards. This myth says that credit cards are always bad news. But what if you're responsible with your spending and can earn rewards or cash back on your purchases? Credit cards can be a useful tool in your financial toolkit. Myth 4: you should always invest in the stock market. This myth says that investing in the stock market is always a good idea. But what if you're not comfortable with the risk or don't have a long-term perspective? There are other investment options like bonds or savings accounts that might be more suitable for your risk tolerance and financial goals. Myth 5: you should always save 20% of your income. This myth says that saving 20% of your income is the gold standard for financial responsibility. But what if you're living in an area with a high cost of living or have other financial priorities like paying off high-interest debt? The reality is that the right savings rate for you depends on your individual financial situation and goals. Maybe you can only afford to save 5% right now, and that's okay. The important thing is to start somewhere and gradually increase your savings over time. Myth 6: you should always avoid debt like the plague. This myth says that all debt is bad news. But what about debt that helps you achieve a long-term financial goal, like a mortgage or student loan? The reality is that some debt can be beneficial if managed responsibly. It's important to understand the difference between good debt and bad debt and make informed decisions about borrowing. And there you have it, 4 common financial myths busted. Remember, personal finance is all about what works best for your individual situation, not about following generic advice. Thanks for watching, and don't forget to subscribe for more.